With the current economy, it may be more important than ever to really know where to put your retirement dollars. Justin Nichols is the executive director of the Financial Wellness Network. All right, Justin, tell us more about folks' current retirement situation. Good, bad, otherwise?
Well, the situation we're looking at right now for retirees is 10,000 people a day are going to be retiring. That's going to continue for the next 10 years. We're looking at around 35 million people that are going to be pulling their money from the markets or moving it around. We're looking at, as far as the market levels, we're looking at 2000, 2007. Those are both pre-crash levels. What we need to look for is keep an eye on risk, and that's paramount right now.
Is there an asset class that you would suggest retirees look at?
Absolutely. First thing I would say is stay away from bonds. They're a bubble. What we need to look for as a retiree is A, we need to retain purchasing power, and B, we need to look for income. That way we're protected against inflation and we're paying for our living expenses.
Can you give me some good ideas some good suggestions of retirement ideas?
Well, there's a couple of funds that we're looking at right now at our firm. One of them is the symbol PCEF. It's an exchange-traded fund. It has a great interest rate. It's appreciated in line with the market this year. Dividends are key, and you also want enough growth, again, to preserve that purchasing power. Another one we're looking at is a symbol called REM. That is also an ETF. Low management fees, good dividend, and a great return this year.
How do you feel about purchasing power?
Purchasing power is, I can't stress the importance of it enough. Something that costs $1 today, 30 years from now, is going to cost you $2.50. If you're not hedging yourself against that, then you're losing money every year.
Now, riddle me this. I always hear it's never too late to invest. So let's say you're 75 or even, somewhere in retirement age. Is it too late to start investing?
It's never too late. The time to start is now. We get that same question from folks who are in their teens. When should I start? Should I wait till I'm 25? Absolutely not. Time is on your side. Time is the one asset that you don't get back that you don't want to waste.
Okay, I know we had a blip a few years ago. How is the market now? Is there an upswing? Is it pretty steady? What are your thoughts?
The markets right now, in my opinion, we're planning on volatility. We're trading at pre-crash levels. There's a big psychological barrier there. So we're watching risk. Don't be scared of volatility. Just manage your risk, and you don't have to worry about it.
And some simple tips for a successful retirement. What are your thoughts on that?
I've got 4 things. One, the average couple retirement is 30 years. So plan for a 30-year retirement. The last thing you want to do is outlive your money. The second thing is to don't over-diversify. If you're holding any more than 60 stocks in a portfolio or a fund that has that many, you're leaving some gains on the table. The third thing is to educate yourselves. Don't be scared of the markets. Retirement's one of those things that we don't necessarily want to deal with, but we have to do. So educate yourselves. The fourth thing that you want to look for is focus on realized gains. If you have all this growth in your portfolio, that's great, but until you get some of that money back, you haven't realized it. Make your money work for you. You have an event coming up. We do.
Do tell.
Join us for lunch. We're going to be at Mestizo in Leawood at 11:30 today. We're going to be talking about post-election healthcare, investments, taxes. I'll be there to answer any questions. Come out and join us.
Right after the show, right after KC Live, you go out to Mestizo.
Be going straight there.
Hook a brother up. All right, thank you, my friend.
Thanks, Michael.
I appreciate it.